we have a model that assumes that by 2050, this is very long term, that Bitcoin becomes a reserve asset that's used in global trade and held by global central banks at a very modest 2% weight. And in that model, we arrive at a $3 million price target for Bitcoin. Now, that sounds, extreme, but that's a 16% compound annual growth rate for a couple decades. That's not really that extreme. So into the millions over the medium term is a high conviction call.
What's going up, bull runners? Welcome back to another deep dive into the world of digital finance. Today, we're going to be tackling a big question. Could Bitcoin really reach $1 million per coin? Well, let's unpack this bold prediction. Bitcoin has come a long way from the inception over coffee back in 2009, from being dismissed as a fad to becoming recognized as an asset class. Bitcoin has seen its fair share of volatility. But what could it take for Bitcoin to reach the astronomical figure of $1 million? First, let's take a look back. Bitcoin started at a fraction of a cent. Over the years, it has soared to nearly $69,000 in 2021. And now obviously sitting at $94,000 in 2024, the growth was fueled by a combination of factors. Bitcoin adoption has seen a significant evolution, transforming from a niche interest among tech enthusiasts to a recognized asset by both individual investors and major institutions. When it comes to adoption, we have individuals, retail investors for adoption. When it comes to individual adoption, there are 5 things to keep in mind. Number 1 would be a store of value. Bitcoin is widely seen by retail investors as a potential store of value. Number 2, a lot of retail investors see it as digital gold. Bitcoin is often referred to as digital gold due to its capped supply of 21 million coins, which mimics gold scarcity, and that makes it an attractive store of value. This attribute appeals to individuals looking to hedge against inflation, especially in economies experiencing currency devaluation. 3 is investment potential. For some, Bitcoin represents an investment opportunity due to its potential for high returns, especially considering its historical price volatility. The narrative of early investors becoming millionaires has fueled further interest. 4th is financial inclusion. In regions where access to traditional banking is limited, Bitcoin offers an alternative for financial transactions and savings, providing economic opportunities. And 5th, what it was all created for first and foremost was payments and transactions. While less common for everyday transactions due to volatility, Bitcoin has become adopted by some businesses, particularly in sectors like technology and online services where it is seen as a modern form of payment. And as of recently, besides retail inclusion, now we have institutional adoption. There's 6 major reasons why institutions are starting to get on board. Of course, the investment diversification. Portfolio diversification, major financial institutions and corporations have started including Bitcoin in their asset allocations. Companies like Tesla and MicroStrategy have publicly announced holdings in Bitcoin as part of their treasury reserve. Second is ETFs and financial products. The introduction of Bitcoin-related financial products like ETFs has facilitated institutional investments by providing a regulated, familiar investment vehicle. This move has been very pivotal in legitimizing Bitcoin in traditional investment circles. The third thing is going to be inflation hedge. With concerns over inflation due to expansive monetary policies globally, Bitcoin's deflationary nature serves as a counterbalance, attracting institutional investors for long-term value preservation. 4th, you have currency stability. In countries facing monetary instability, Bitcoin provides an alternative that's not subject to local economic policies or central bank decisions. And 5th, you have the actual technology. Interest in Bitcoin sometimes extends to interest in blockchain technology, with institutions exploring its applications beyond just currency. And 6th, obviously the most important part is client demand. Financial institutions are also responding to demand from retail investors interested in cryptocurrency, leading to the development of custody services, trading platforms, and other crypto-related offerings. And when it comes to Bitcoin, besides adoption, we also have to keep in mind the scarcity of Bitcoin. Bitcoin gives you the creation of scarcity. It's a fixed supply cap. Bitcoin's protocol, written by its synonymous creator, Satoshi Nakamoto, dictates that there will only ever be 21 million Bitcoins created. This cap is hard-coded into Bitcoin source code, making it a fundamental aspect of its design. Then you have the mining and the halving. New Bitcoins are introduced into circulation through a process called mining. Miners solve complex cryptographic puzzles to validate transactions and add them to the blockchain. They then earn newly minted Bitcoins as a reward. However, this reward is halved approximately every 4 years in an event known as the halving. This reduction in new supply issuance slows down the rate at which Bitcoins are created, increasing scarcity over time. The initial block reward was 50 Bitcoin, which halved to 25 Bitcoin in 2012. Then it went to 12.5 Bitcoin in 2016, 6.25 Bitcoin in 2020. And after the next halving in 2024, it is currently at 3.125 Bitcoin per reward. This process will continue until the mining reward becomes negligible, effectively stopping the creation of new Bitcoins around the year 2140. But why is scarcity even a thing? Why does that matter? Well, value appreciation, the scarcity mimics that of precious metals like gold, where a finite supply against increasing demand can lead to the value appreciation. The idea is that the demand for Bitcoin increases and the supply remains constant or decreases due to loss or forgotten wallets. The price of Bitcoin should theoretically rise, which also gives you inflation resistance because unlike fiat currencies, which can be printed into unlimited quantities leading to inflation, Bitcoin's fixed supply cap makes it inherently resistant to inflation. This deflationary nature often cited as the reason for Bitcoin being a store of value similar to gold, which also leads to its investment appeal. The scarcity adds to Bitcoin's appeal as an investment. Investors often purchase Bitcoin not just for its utility and transactions, but for its potential to increase in value over time due to the limited supply. With being a digital product, this is real artificial scarcity. Digital nature. With this being a digital creation, it is actually artificial scarcity. Bitcoin scarcity is termed artificial because it is not a natural phenomenon, but a result of a programming. Unlike physical commodities whose scarcity might be due to the natural supply constraints, Bitcoin scarcity is entirely digital and determined by software rules. And to add to scarcity, people lose Bitcoins all the time. A portion of Bitcoins are considered lost due to the lost keys or forgotten passwords, effectively reducing the circulating supply. Estimates suggest that millions of Bitcoins might never be recovered, enhancing the scarcity. Another thing that can really surge the price of Bitcoin going forward, will it ever reach $1 million, is the cultural and economic perspective. The narrative around Bitcoin's scarcity often revolves around its being digital gold, where scarcity is a virtue that leads to the stability and value over time. This scarcity also drives Bitcoin's market dynamics. Speculation around Bitcoin often centers on its finite supply, with some investors believing that as traditional monetary systems inflate, Bitcoin's value will appreciate due to its capped supply. Now, on the negative side, there are critics out there that argue that while this scarcity can drive up value in the short term, it could also lead to issues like extremely volatility or becoming irrelevant if Bitcoin fails to gain widespread adoption, or if better alternatives arise.
Hey, bull runners, check this out. If you want to learn how to find the next 10x, 50x, or even 100x altcoin in this video, listen to this. Our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1 and is currently still up over 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. And the bull run is just getting started. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, This is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses through the link below. But I'm not going to talk all about that in this video because we have a lot to cover. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers because we have a lot to cover with you over the next few minutes in this video to help you become the first millionaire in your family tree. If that's a goal of yours, our goal is to help 1,000 members set their portfolio up for life this month. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. We have about 200 members right now, and we literally just launched like less than 5 days ago at the time of making this video. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.
So with all of that technical information in mind, let's take a look at some real world information right here. So this was a great post from Plan C talking about we are so early to Bitcoin. And this is important because when it comes to the market cap of Bitcoin, the price of Bitcoin, we are extremely early. So let's take a look. Companies that own Bitcoin right now, United States and major corporations around the world, we have Apple doesn't hold any Bitcoin yet. NVIDIA, no Bitcoin yet. Microsoft, there's huge talks that Michael Saylor will be giving a talk to the Microsoft board and the company explaining why it would be smart to actually have some Bitcoin on their book. So that is probably coming. We have Google, 0. Amazon, 0. Saudi Aramco, 0. Facebook, 0. Tesla does hold 11,509. Berkshire Hathaway, 0. TSMC, 0. So major corporations not holding any Bitcoin yet. So you can see that if they were to go and acquire Bitcoin, let's just say they all acquired 10,000 Bitcoin. Out of the 9 companies on this 10 company list acquired 10,000, that would be 90,000 Bitcoin swapped up, purchased, swooped, gone. And we already know the scarcity situation. That would be amazing. Then we have countries. United States has 212. China, 190. So we were talking about countries. These are not companies. They're obviously going to need to hold significant more than just what a company would hold. But let's say that these each bought 50,000. All of the companies holding 0 by 50. So that's 7 countries on the list that hold 0. 7 times 50, 350,000 Bitcoin off the market, plus 90,000 Bitcoin off the market here. You're looking at nearly 450,000 actual coins taken off the market. And if you divide that into the 21 million Bitcoin that could be in circulation, which we know some are lost, again, with the scarcity thing we talked about, you're looking at 2% accumulation of Bitcoin. On that list did not even include Michael Saylor, who just made his largest Bitcoin acquisition. He himself bought 51,780 Bitcoin for around $4.6 billion. And they're even looking to raise more capital. As we can see right here, MicroStrategy announces proposed private offering of $1.75 billion. So we're having extreme acceleration of acquiring Bitcoin off of the market. And we jump over here to Grok to take a quick little look and see what would it take, or what would the market cap of Bitcoin need to be for $1 million coin. So if you take the math, market cap equals price times price per coin times total supply of coins. Given that the total supply of Bitcoin is capped at approximately 21 million, Bitcoin's market cap for a $1 million coin would need to be $21 trillion. When we take out the true look at Bitcoin's market cap right now, it is only 1.8, so say 2 trillion. So there's 19 trillion more dollars that would need to flow into Bitcoin, just Bitcoin alone, in order for it to drive up to that price. It does go on to say, assuming around 19 million are currently in circulation or eventually will be due to lost coins, people say that there could be close to 2 million, even more coins that have been misplaced or lost over time. We do have a market cap of $1 million per coin times 19. It would be a $19 trillion market cap. So looking at where we're at right now, well, what percentage of growth would it need to go from $94,000 a coin to $1 million a coin? Bitcoin to go from 94,000 to $1 million per coin, it would represent a growth of approximately 964% from where we're sitting today. So nearly 10x your money. Some other things to keep in mind, $11 trillion BlackRock is now endorsing strategic Bitcoin reserve for the United States. Now, we've also heard multiple states are looking to create their own Bitcoin strategic reserve where they would be holding it within their states. Then you have the federal government of the United States, which already has over 200,000, but they want to set it up where they hold significantly more. There's even actual legislation on the books right now going through the system. Strategic Bitcoin Reserve Act of 2025, state legislature finds the following: inflation has eroded the purchasing power of the assets held in the state's funds managed by state treasurer as well as the state retirement funds. This erosion diminishes the value of every state's reserve, affecting the financial stability and economic security of the state, its taxpayers, and its residents. And it goes over some more great information here, but look at number 6, the state of blank, insert state here. So all states could be put in there in the United States, should have access to tools such as Bitcoin to protect them against inflation. And this is from Dennis Porter. He says, breaking, I can confirm that within hours of open sourcing our strategic Bitcoin reserve legislation, multiple lawmakers and presidential candidate endorsed the policy and vowed to pass it into law. Other countries are starting to get on board. Polish presidential candidate to create a strategic Bitcoin reserve for Poland. And on the political side of things, President-elect Donald Trump, depending on when you're watching this video, obviously supports moving forward with this whole crypto initiative, Bitcoin initiative going forward. Brian Armstrong, owner of Coinbase, is meeting with Trump to discuss information about crypto. Larry Fink, another BlackRock executive, have been contacted by the Trump team to talk about the Treasury Secretary. Larry Fink, BlackRock, talking about Bitcoin. Just in, BlackRock says that there's a renewed sense of optimism for Bitcoin with Donald Trump at the Strategic Bitcoin Reserve. Now, obviously, we're talking millions of dollars in the future, right? $1 million per coin, several years from now, potentially 24 months, who knows? Maybe even quicker if all this stuff really gets on board. But then we also have Mr. Wonderful from Shark Tank fame. Bitcoin is going to hit $100,000 long before the holiday.
Bitcoin is going to hit $100,000 long before the holiday, I think. It's so close, and there's no resistance here. This is the crypto of choice for financial institutions and sovereign wealth. They don't care about anything else, just Bitcoin. And so the aspect of mining it gets more complex. Big debate about the electricity needed to do this. But at the same time, it's an alternative asset here to stay.
Weren't you over there in Qatar? There was something to do with a crypto conference over there. You had something to do with it?
Yes, I was there. We still do
was
not.
That the springboard?
Well, the truth is, sovereign wealth has still yet to get involved. People keep talking as if they are, not yet. But when they come on, this will go and go and go and go because they're agnostic to the price. They're going to hold it for 10 years.
Hey, bull runners, this is super time sensitive, especially if you're looking to stack more crypto before the bull run is over. Did you know that Visa and MasterCard lost a $5.5 billion class action lawsuit for imposing unfair fees on merchants and business owners? So if you own a business or if you know any business owners that process payments with Visa or MasterCard between 2004 and 2019, that's 15 years, you could actually be owed a refund of 1 to 1.5% of your total revenue from that period. That's a lot of money. For example, this business that generated $1.6 million in credit card revenue during those years is getting back $28,000. This business that generated over $7 million is getting back $93,000. And this business that generated over $20 million during those years is getting back over $320,000. That's money they didn't even know was on the table. And all they did was fill out a form through the link below this video. It literally takes less than a minute to see if you qualify, but you don't want to wait too long because the deadline to file is February 4th, 2025. So the sooner that you fill out the form below, the sooner that you can reclaim what's rightfully yours. Plus, if you don't have a business, you can actually earn 3% by referring businesses that do qualify by creating your affiliate account through the link below. So this is a no-brainer way to get money back in your pocket to use for your business, or if you want to use it for crypto or other assets to invest in, you can do that. So click the link below. Let's get you paid.